Hey, it is Troy Stavros with Cornerstone Realty Associates here in Knoxville. Time to go over our monthly market report, looking at all the data that has come in through the end of June. So everything through the end of June, let's take a look and see what is happening in East Tennessee and all of the Knoxville area. So jumping into East Tennessee, we can see that home sales, when we compare June of 2024 to June of 2023, home sales are down 12.5%. Pending sales are up 4.8%. The inventory of homes is up 40%. So there's 40% more homes for sale right now than there was a year ago. New listings are up just 1%. The median sales price is up 8.01% compared to a year ago and coming in at $376,500, with the average sold price per square foot coming in at $221 per square foot in all of East Tennessee. The absorption rate increased from last month, going to 3.3 months worth of inventory compared to 3.2 months worth last month. So we are seeing a little bit more inventory come on the market. We're seeing demand a little bit less, but still just over 3 months worth of inventory, which is keeping prices going up. Like we're seeing here, the median sales price up 8.01% compared to a year ago. So as long as we continue to have this low inventory, we can expect prices to be stable and rising. Let's take a look at the graph here for what is happening in East Tennessee. When we take a look at the number of listings graph here, looking at first at the active listings, we can see that they have been trending up since February and just on a continual incline. And at some point, these will top out and start coming down, but we're towards the end of the spring selling season. So at some point, we are going to see that crest and start to come down. And this will be something that we want to keep an eye on. When we look at what's happened with new listings, we can see that they had been increasing. And then over the last month, they just started to come down a bit as well. Pending listings, those have been pretty much flat since March, April, May. They've been pretty flat across the board, pretty stable. And then as far as sold listings, we had seen those increasing all the way through last month. And then between last month and June, we saw those tick down a little bit, a few less sold listings in East Tennessee. When we look at the listing prices, starting with the active listing prices, we saw those going up since February and then level off over the last 3 months. When we look at the new median list price, those have also been pretty stable since March. When we look at the pending prices, again, those stable as well. And the sold prices have been pretty stable and then ticked up over the last couple months as well. So everything as far as the prices has been stable. We haven't seen prices drop. We haven't seen huge increases in prices, but pretty much stable across the board. And that is probably because of what has been happening with interest rates, and we'll talk about that in a little bit. When we look at the absorption rate here, we can see that has been ticking up ever since February. And what that means is more inventory has been building, maybe a little bit less demand, and that has allowed more inventory to build. Now, obviously, it's not building a lot because we're below 3.5 months worth of inventory when a healthy market is at 6 months worth of inventory. So still definitely in a seller's market. You can see the days on the market has been continuing to fall. So homes are still selling. Just right now, 37.8 days is the average days on the market for listings in East Tennessee. Let's jump over and look at Knoxville, see what's happening in Knoxville. So compared to last year, home sales are down 8.4%. Pending sales are up 1.3%. The inventory of homes in Knoxville, and when I say Knoxville, that's everything with a Knoxville, Tennessee address. Inventory is up 53.5%. So quite a bit more inventory on the market now compared to last year, which is good for buyers. New listings down just a hair, 0.3%. pretty much even, same as last year. And the median sales price is up 3% compared to a year ago in Knoxville, coming in at $408,150, with the average sold price per square foot coming in at $220 per square foot, with the absorption rate ticking up a little bit compared to last month, now at 1.84 months worth of inventory versus 1.7 last month. So again, seeing a little bit more inventory build, but this is still under 2 months worth of inventory, which is extremely low. So again, with inventory this low, we'll continue to see prices steady to rising. And if anything were to happen with the interest rate, which again we'll talk about in a minute, if interest rates were to go down, I think we would see demand enter the market again and things start to get a little crazy again. But let's take a look and see what is happening overall in the Knoxville market. When we look here, the Knoxville Market Action Index, this measures what is happening as far as whether it's a seller's market or a buyer's market. It looks at supply and demand, and you can see this black line is 2024. So we're actually in less of a seller's market than we have been in the last 2 years, and it's been decreasing, and that is because interest rates have remained high. We're in a better seller's market than we were in 2019, which is this red line, but we're not too far from it. Right now, we're at a 44.82. When I show you this diagram here, and I've shown you this before, the 30 mark on this speedometer is the break even between a buyer's market and a seller's market. If you're below 30, you're in a buyer's market. If you're above 30, you're in a seller's market. So you can see we're still in quite a bit of a seller's market, even at these numbers in the 40s and 50s. So still in a strong seller's market. When we look down here, as far as inventory, you can see inventory has definitely been increasing steadily. It hasn't been a huge jump up. This angle of this slope isn't shooting straight up. If it was, then that might be something to be concerned with, but it's been a steady climb this year to where we are now. We've surpassed where we were in 2020, but you can see we have more inventory now than we have had in any year since pre-pandemic. So again, good news for buyers if we could just get buyers better interest rates. But again, I'm going to talk about that in a minute. New listings have been rising steadily as well. You can see this black line continuing to creep upward. So right now, new listings are continuing to rise. Also good news for buyers. The median price has been holding pretty steady and below where we were last year, but we're getting ready to surpass where we were last year. But up until now, we've been below where we were last year. So it's actually been a better market for buyers as far as affordability with home prices. But interest rates have not been as good this year as they were in parts of last year. When we look at the price of the new median listings hitting the market, you can see the new homes that are hitting the market, newly listed, are definitely priced higher than where they were previous years. So again, we saw that in the graphic with East Tennessee. Those prices are steady to rising, and they will continue to be as long as inventory is low. Price decreases in Knoxville have been above where they have been over the last 4 years all year long. So our price decreases have been higher this year than they have been any of the past years, even pre-pandemic. So you can see 22, 23, 24, 2019, and this black line is 2024. So definitely there have been more price decreases this year on active listings than there were any year previously over the last few years. But it has been pretty steady. It has jumped up and increased a little bit here of late, but if we see some action with interest rates, we might see that start to come down as well. But right now, this is saying that 46% of the homes actively on the market have had a price reduction. When we look at the areas as a whole at the Market Action Index, okay, what is the hottest market right now? The hottest market as far as supply and demand goes would be Oak Ridge. They're coming in at a 58.52. So that's probably your hottest market. Then you have some West Knoxville markets like 37923, also hot up at 55. South Knoxville, which is 37920, is a hot market. This is Farragut 37934, also a hot market. And then Knoxville in general is definitely in a seller's market. The only market right now that is not in a seller's market is Sevierville and Sevier County, which is below 30 at a 26.87. And that is because there is so much inventory on the market. There's more inventory in Sevier County right now than there was pre-pandemic. So we're starting to see that affect the prices in Sevier County as well. As far as price decreases, again, it matches up. Sevierville has the most price decreases, the most inventory, and most days on the market. Let's take a look over here. As far as Knoxville, again, we talked about the market action index, but when we look at inventory, you can see that inventory has been steadily rising over the last few years. This diamond shows the exact same point in time in the previous year, and you can see it's been a steady increase. If I was to draw a line from here through the diamonds, it's been a steady increase up to where it is today. What we want to watch for and make sure is there isn't a big jump, because that's when you might need to be concerned, but the slope has been steady, which is good. When we look at what is happening in the market segments, again, these segments, if you've watched my previous videos, this segment represents approximately 25% of the market ordered by price. So the lowest segment comes in at $299,800. In that segment, you can get about 1,300 square feet in a home on average, a 3-bedroom, 2-bath, a home that's about 68 years old. And this is looking at what happened last week. And again, we have to take last week with a grain of salt because it was a holiday week with July 4th falling right in the middle. So that will definitely have an effect on these numbers. But just looking at this, there were 45 new listings that came on the market in that segment last week, and 44 of those were absorbed. So still plenty of demand even during a holiday week in that lowest price segment. And the average days on the market in that segment, 28 days on the market. The next segment up was 419.9. In that segment, you can expect to get 1,978 square feet, 3-bedroom, 2.5-bath home, about 28 years old. In that segment, we saw 46 new listings come on the market last week, 38 get absorbed, and the average days on the market for the active listings in that segment was also 28 days. Not as much absorption here, but again, you have to take that with a grain of salt because of the holiday week. The segment above that came in at 559.9. In that segment, you can get 2613 square feet, 4-bedroom, 3-bath, about a 17-year-old home. That segment saw 33 new listings hit the market and 19 get absorbed, so not as much demand last week in that price segment. So we'll want to watch that in this coming week and see what difference that has made. But also only 28 days on the market for the homes actively on the market in that price segment. In the top segment, came in at 929.9. In that segment, you can expect to get about 3,568 square feet, 4 bedrooms, 3.5 baths, a home that's about 18 years old. That segment, the highest segment, saw 29 new listings come on the market and 17 get absorbed. And that segment has the most days on the market. So the homes that are currently active on the market in that segment have been on an average of 49 days. So this is definitely the weakest segment as far as demand, but it's also the most expensive. And you can see the other 3 segments here all have the same days on the market. So they're all pretty even as of right now in Knoxville. Let's take a look at some of the surrounding counties. Oh, one other thing I wanted to say about Knoxville that's very interesting. Let me show you this graphic here. So when you look at this graphic shows you home price shifts in America's 200 largest metro area housing markets, of which Knoxville falls into that. When you look at this graphic, if you're looking at the percentage numbers on the left-hand side going vertically, that's these right here, that's telling us how much the shift has been in prices since the peak in 2022. Going horizontally, this number is telling you how much has the difference been since March of 2020. So the highest on the vertical is telling you the highest shifts in price since 2022. The highest on the right is the highest shifts in price since March of 2020. Look what is the furthest right and almost to the highest up right here, Knoxville, Tennessee. That is telling you that Knoxville has had probably the biggest shift in prices than most cities in the United States. When we hover over that, it says the price shift since the peak in 2022 was 11.5%. So we saw prices increase 11.5% since the peak in 2022. But the price shift since March of 2020 was 73%. That is the biggest of any of the 200 largest metro housing markets. Knoxville saw the biggest price increase since March of 2020, 73%. And the active inventory for sale in May, it showed 1889. So we're still below where we were pre-pandemic as far as inventory, which means we are still going to see prices level to rising in Knoxville. So the housing market here has obviously done very well over the last 4 years and continues to look like it's going to do well. So very interesting graphic here. Okay, let's jump over and take a look at what's happening in the surrounding counties. So in Roane County, available inventory is up 70.5% compared to a year ago. That's quite a bit. Pending sales in Roane County are down 22.1% compared to a year ago. The median sales price, however, is up 19.3% and coming in at $340,000, with the median sold price per square foot in Roane County coming in at $185 per square foot. In Knox County, available inventory is up 56.3%. Pending sales are up 1.1%. And the median sales price in Knox County is up 2.41% and coming in at $399,900, with the median sold price per square foot in Knox County coming in at $233 per square foot. In Anderson County, available inventory is up 43.8%. Pending sales were flat, and median sales price was up 10.34% compared to a year ago, coming in at $320,000, with the median sold price per square foot in Anderson County coming in at $191 per square foot. In Loudoun County, the available inventory is up 63% compared to a year ago. Pending sales were up 4.9%, and the median sales price in Loudoun County was up 4.10%, coming in at $510,000, with the median sold price per square foot in Loudoun County coming in at $236 per square foot. In Sevier County, the available inventory was up 47.5%. Pending sales were up 11% compared to a year ago, and the median sales price in Sevier County was up 5.52% and coming in at $525,750, with the median sold price per square foot in Sevier County coming in at $290 per square foot. In Blount County, available inventory was up 55.4%. Pending sales were up 9.4%, and the median sales price was up 8.84%, coming in at $413,500, with the median sold price per square foot in Blount County coming in at $234 per square foot. You can see as far as the median sales price all across the board in all of the surrounding counties, prices are up. There is nowhere in any of the counties where prices are down. So prices are still increasing, some at a big clip like Roane County at 19.3%, but everywhere in the East Tennessee area, we are still seeing prices increase year over year. Okay, just a couple other things I wanted to tell you about before we jump off, but as far as where we are in the market here in East Tennessee, homes are still selling. Demand is down because of interest rates being high on a steady basis. But another thing I'm going to show you here, let's talk about what happened with interest rates today. This is showing you what has happened with interest rates over time. But as of today, which is July 11th, today the inflation data came in better than expected, which caused a big drop in interest rates, which is great news for the housing market and for buyers. So we were over 7% basically yesterday, and you can see this big drop right here. So we dropped basically from 7.01. Yesterday we were at 6.99, and today we had a drop all the way down to 6.85% for the 30-year interest rate, which is great news. So last week we had the jobs data come in that wasn't as favorable. That could lead to interest rates coming down a little bit and the Fed looking at things and possibly reducing their rate. But then inflation data comes in better. So that is two positive things that might lead to the Fed reducing their rate, which affects the markets. And this is what happens. You get an interest rate drop from 7% down to 6.85. Now, the hope is that they'll stay below 7%, but right now, it'd be a great time to lock in, and hopefully we'll see these rates stay under 7% for a little bit. Now that they're saying the Fed will hopefully cut in September and possibly have 2 to maybe 3 cuts before the end of this year, which would be great for mortgage interest rates. The other thing I wanted to talk about that has been a big change across the nation as well as here in Tennessee is the yearly average rate changes for homeowners insurance in the United States. You can see that in the U.S., it was basically pretty steady. 2018, 2019, there weren't any really big jumps. But then you can see over the last couple of years, we've had some big jumps in homeowners insurance rates. In the U.S., in 2022, the average jump in insurance rate was 6.2%, and then in 2023, 11.3%. Here in Tennessee, you can see we were doing great. 2018, only 2%. 2019, 0.8% increase. 2020, 1.4% increase. 2021, 1.8%. Then 2022, it started to tick up a little bit more, 4.6%. And then last year, 2023, we saw 11% increase in homeowners insurance. So this is another thing that is affecting affordability because not only are interest rates high for buyers, but so is homeowners insurance. That's yet another thing that has to be rolled in to their mortgage if they're escrowing it. So it's going to add on to their mortgage payment. So this is another factor that we're dealing with right now nationwide is the increase in homeowners insurance rates. And then the last thing I just wanted to show you as far as the market in general is why it seems like demand has been low and the proof that demand has been low for houses, and that the only thing that has really been keeping our prices steady to rising is the extremely low inventory. This says right here, the U.S. mortgage market is experiencing one of the biggest downturns in history. It talks about layoffs in the mortgage industry and how mortgage purchase applications have been hovering around multi-decade lows since 2022. It says that the decline in mortgage purchase applications isn't just due to priced out buyers. It also stems from the mortgage rate shock coinciding with decreased turnover among existing homeowners. That's known as the lock-in effect. We've talked about this before. Some would-be sellers can't afford to sell and buy something else at current rates, while others simply refuse to trade their 2 or 3% mortgage rates for rates of 6 or 7%. Thus, fewer mortgages are being issued. And by looking at this chart, this is showing you the mortgage purchase application index right here, seasonally adjusted. And you can see this is 2020. Back in 2024, it was way up here, came down here. It hovered here pretty low after the housing crisis in 2008. And then it started going back up. But right now, we are way down here. We are below where we were after the housing crisis. So this is showing you that demand for purchase applications is incredibly low right now. That means fewer buyers are putting in for purchase applications, and that is why demand is so low. One, because the interest rates are high. It's harder for buyers to afford things at the current interest rates. And also what it talks about up here with the sellers, there are fewer sellers that are wanting to sell because they are locked in to their low interest rates, and to trade those for a higher interest rate and a more expensive house just prices them out of the ability to do so. just showing you that the demand has been low, and the only thing that is keeping the housing market propped where it is the fact that inventory is extremely low as well. So thank goodness that we had interest rates drop below 7% today, and let's just hope and pray that they can stay below 7% and maybe move even lower to give a little bit more room for buyers to go ahead and move forward with buying, and for sellers to feel comfortable with putting their homes on the market and buying something else, opening up more inventory for everybody, making it easier for buyers to be able to afford a home. If you have any questions about any of this information, don't hesitate to reach out to me. If you're looking to buy or sell a home here in East Tennessee, reach out. We would love to help you. If you have questions about the value of your home, or if you have any questions at all, just reach out. This is Troy Stavros with Cornerstone Realty Associates here in Knoxville. We will talk to you soon.